Hello, welcome to another episode of Executive Suite. I'm your host, Thomas Braun, and today I have the pleasure of interviewing John MacInnes, the CEO of CIM Amplify, which is an M&A transaction platform that has already facilitated $3 billion worth of transactions in the first 10 months of its existence. So we're now going to find out all about it from John MacInnes.
Yeah, thank you very much for that, Thomas. We started CIM Amplify with exactly that goal. We want to help entrepreneurs and any business owner, whether they're hired guns or not, but any business to try and sell a little bit better and to sell their company so that they can get that brass ring of owning companies, which is usually to sell.
Really? Okay. So, how many deals have you had listed on your website so far?
We've been super proud of how it's gone so far. In 10 months, we've had $3 billion worth of deals go through the platform. 90% of them in the US, but we've got lots of Canadian, European deals as well. And so that's about 300 million a month. Out of that, 1.1 billion have been sold by the advisors. So we take advisors deals or brokers or investment bankers, and we just post them for better exposure to more buyers than they might have had before. And the average deal size is about 22 million.
Okay, so let's talk about the platform for a minute here. So companies can list on your platform and they pay a fixed fee. So you don't charge a commission or anything, right?
Yeah, so it doesn't exactly work that way. What happens is we only take deals that are prepared by M&A advisors and brokers. And so we don't take deals that are fresh. I call them fresh deals. So we don't take any off-market deals. And the reason for that is we're not M&A advisors. And I truly think that anybody that's selling their company or considering it, they should always go out and find an M&A advisor first. And so once the advisor has prepared the information, then they send it to us and we will post it on the site to thousands of buyers that can see these. And then if there's an interest, the buyers will reach out to the advisor.
I see. So you're selling the memberships to the advisors, not the companies?
To the buyers, actually.
To the buyers. Okay, so
Yeah.
buyers buy a membership,
Yeah.
and then they get to view listings where you give
Exactly.
us like a summary of the private company, I'm assuming.
Yeah.
And
the summary is typically called a teaser. And so the teaser is posted to our website. And then the buyers can see that. And if they've got interest in the company, then they reach out directly to the M&A advisor, broker, or investment banker.
Okay. So how many businesses are listed there at any given time?
Today we've got 81 businesses and about $1.2 billion in overall value.
Wow.
And so there's lots of businesses. We have a minimum of $1 million EBITDA, and so they have to be. And EBITDA is kind of reflective of profit, net income, that sort of thing. And but it's an industry standard for measuring deals, and so all of our deals have to have $1 million of EBITDA to be listed.
Right. Wow. And you're going on companies like does the average company have audited financial statements? I'm just curious.
For this size, typically they will have audited financials, and they're just a little bit larger. They're what's called lower market, lower to middle market. But we do have some upper market deals that are in the hundreds and hundreds of millions of dollars in revenue. But they will have some sort of financials. But once they've gone through a process with the advisor, they'll also have a full package that can be given to buyers once the relationship is built. That's called a CIM, hence CIM Amplify or CIM Amplify. And so typically they've gone through a process where the financials have been vetted. There's information about the company, who's in it, contracts, all those sorts of things.
Right. So this confidential information memorandum, it's similar in its structure to like a regular offering memorandum, I assume. And then you have
Correct.
the financial statements and exhibits attached at the back. Okay.
Correct. Yeah.
Now, Are you allowed to talk about any of the companies that have closed on your website? Because they're all behind that memberships only paywall, I guess, right? So members of the public can't really see them. But do you have any good examples you can give us about companies that have closed on
Yeah, let me
deals?
just go for some of one of my favorites. There's well, there's just so many. Probably one of the things that I really like about what we're doing is I get to see. So we've had well over I think we're close to 100 different industries that have posted on the site that have been
Oh,
posted. So
hmm.
it's not any particular type like MSPs or software. But one of the ones that I really liked because they had a beautiful video for it was there was a winery down in California that sold and sold for quite a bit. And it was a really, really well run organization. But the video of it zooming in and seeing this winery was amazing. And so that's one of the ones. And they were doing, let me just find out, probably about 30 million in revenue, and would have had a really good profitability as well.
Mm. Now, do you see the multiples of for prices, selling prices, multiples of an EBITDA
Uh,
across different industries?
Great question. Typically, we don't see the multiple because we don't know exactly what it is. Um, it's very rare for somebody to advertise a selling price on our site just because the companies are bigger, and so what they actually sell for, we don't typically hear about it. Um, so kind of no, but there are a few things that absolutely affect multiples of EBITDA or revenue that we hear about every day. And a few of those, there's really three. The first one is management team, whether your management team is going to be able to take over after if you're retiring or whatever. But you've got a good team around the company so that the buyers don't actually have to come in and run it. And that's not always the case, but that's one of the big things. Another one is around customer concentration, and so we always get asked, or it's in most of the teasers, just what percentage of your customers are how big one customer might be for the deal, and so you typically customer concentration is another one, and then how long you've been around and how long you've been producing value as a company. So those are kind of the top three things that affect EBITDA
Yeah,
or
and
multiples.
what's just even though you don't have access to the final figures because that's confidential between the buyer and the seller, you must know from talking to these advisors on a daily basis what the market's like. What is the range right now that people can expect?
Yeah, I mean that's kind of how blue is the sky type question. Every industry has a different multiple, and it really has to do. A lot of it has to do whether you've got IP, and so or whether you're distributing projects, whether you're project based like an HVAC company or something like that. And so it's all over the place. I couldn't even throw a dart for you. And also, I mean, you could see right now AI companies would be worth the most out there, the most multiple. But companies that are service based or professional corporations, typically that it's the people that are creating the value by charging by the hour. Those ones would be a little bit lower. Ones that have strong IP that can be used in a bunch of different places, those ones would be valued a little bit higher. Um, and then, of course, you've got inventory that gets thrown in and stuff like that. But it's an impossible question to answer because every deal is different.
Okay.
Especially down to
Hmm.
industry. And usually, so just going back to if an advisor, when they're trying to figure out your valuation, they'll try and go and find um, uh, comparable deals in that industry and use that as a baseline.
Hmm. Okay. Can't be easy though if everything's private. How do you find comps?
Yeah, there are. So we don't do it, but there's systems like there's one called PitchBook,
PitchBook. Hmm.
and there's other ones. around where people are reporting their deals and what the comps are on those deals. And if a good M&A advisor will have sold hundreds of companies, so they've got their own comps as well, and so they can go back and see what they are. So there is ways to dig up comps, but we as CIM Amplify, we don't keep that information.
Okay, so if somebody's looking for an exit here and they want to explore this avenue, then they first need to find the advisor. Where do you find an advisor? Because it's not quite the same as asking around for a good real estate agent or whatever, where everybody seems to know someone who's a real estate agent. How do you find an advisor?
Yeah, it's a great question, and one that I get asked quite a bit, and I'm actually thinking that we're going to try and solve that in the future. So we've actually started a website called advisorchooser.com, and you'll see that it's not up yet, but it is a very tough part. Right now, most advisors come from references. So you'll be talking to your friends that own companies and say, hey, you sold, who did you sell through? So that comes through. You can go on the web, but it's kind of hit and miss. And I think so whenever you're going to choose an advisor, you'll find lots by looking on the web. But you should never go with the first one. You should interview about 5. Your company culture is an important piece. Yeah, you should always go with 5 minimum and interview them. Come up with 5 questions that you're going to ask. And a lot of it is about, what kind of work is up front? What are you going to do in the back end? How much are your fees? Because they all charge fees. How do fees work? And have you ever sold a company like mine before? And those are great questions. And those types of questions will move you on through them. But what it really comes to is, do they get you? And are they able to present you to enough buyers out there that, because the more buyers, the higher the price. It's just an absolute truth. And so they need to be able to present you to people in your industry and strategics. And also they need to be able to present you to the people you already know. Like, your competitors, they may not, but they need to be able to present in a good way that way. But I would strongly suggest, one, advisorchooser.com when it comes out next month. But also do research and find people that work for you.
Okay. Now you were saying you got some international deals. So if you're, say, really potentially attractive AI startup from Canada, for example, should you get an advisor in, like, a local Canadian advisor, or would you be better off getting a US advisor? Do they have a bigger audience?
Yeah, it's a great question because I'm Canadian, so it's a tough question. Now, we sold both of our companies through U.S. advisors because they were larger software companies, fintech and software. So yeah, I think the answer to that. So when people ask me where is the advisor and what's the best, if you're sort of a main street brick and mortar type business, the smaller, like in nail salons, those sorts of things, I would say yes, absolutely use a local broker because they'll know the people and they'll be looking for something. As you start to move to less specific location based and your customers expand, I think your best bet is to find advisors where your customers are, because your customers are also the other people's customers, and those. And then you move up to searching for M&A advisors online, so boutique advisor companies, but also all of the banks and your accounting firms, they will have investment banking arms. So you've got brokers, boutique advisors, and then investment banking arms. And investment banking arms are typically for much, much larger companies. So I don't know if that answers the question, but I think
yeah, it does.
Where your customers are is where you should start thinking about who can help you.
Are you seeing a lot of service as a software companies?
Yes. Oh, for sure. So we've always got lots of software as a service companies. Software as a service, I'm very familiar with it because that's what I build. And they're and typically software as a service, you're going to get a higher multiple because you've got really clear recurring revenues. But yes, we see lots of those.
Right. It seems that category is pretty large though, like because you've got companies that are basically kind of like just working by the hour, like in like a law firm or accounting firm. Then you have others that actually have really extensive IP, and
Yeah.
they can set you up with your own bank if you want. You know,
Wow.
so so are you, and that's where you're talking about the multiples then. So with the ones that are just relying on a lot of human work essentially by the hour, you're going to get a lower multiple than the ones that are really more like a regular software company than
Yeah.
SaaS.
What I like to say with, at least on the valuation side, and just if you're thinking about your company as a whole, if you're making money when you're sleeping, that means that there's probably some IP,
Hmm.
and so that it's selling like a product. And IP is not just software; it can be manufacturing process products, those sorts of things that you own and you've built. So it's not limited to software. It's just software is very easy to show recurring revenue, because software as a service is, you're getting paid monthly, and you can probably extrapolate that out monthly or yearly, if it's a valuable enough software for your customers. But um, project-based companies, they typically will get a lower EBITDA multiple, but they sometimes and often will have higher revenues and more. Uh, they've got more revenues going through, and so it sort of does even out a little bit.
Mm. What percentage of your listings would you say are relistings? Because the private equity people also need an exit at some point.
Correct. So those are what we call, those are they're called portcos, and portcos are sold in a few different ways. So portfolio means portfolio company, and so if it's a relisting, what a private equity will do typically, and this isn't all private equity and family offices and those, they will buy what's called a platform company, and so they'll buy one company that's fairly large in the space, and then they'll go and try and buy a bunch of add-ons to add value, well, consolidating the accounting and the back end and all that kind of stuff. So trying to add more and more profit or EBITDA to the system, and then they will go to a point where they want to sell it because they're selling it up to the next level of private equity. And what percentage of on our site? Probably about 20%. So we don't see a lot of those, because sometimes they trade between companies and they just know them already between private equity companies. But I'd say about 20% of our sales are portcos.
Hmm. Now, do you see companies that should maybe go public instead? Because I think you get a much higher multiple on the public market. Like, for example, you know, medical devices, something like that. You can get like times 20 or times
Yeah.
60.
Yeah, I mean, it's a great question. We don't see companies that we'd make that we'd actually even think about that, because these are ones that are typically for private sale. Um, I think liquidity events are sell your company, IPO, or new investors coming in and kind of eventually selling the company that way. Um, I think IPO is actually a really good way to, if your company is solid enough, it takes a strong stomach to do an IPO though, and a lot of regulation, and it changes the way that you operate significantly, I think, for the better, because there's more public reporting. But yeah, it's another great way. You have to be substantial enough to be able to do that. So you've got some really good customer base and some traction to be able to do that. But saying that, if you look at it, there's a lot of mining companies that they start out going IPO, and more commodities companies that they go IPO. I don't think that I would start a software company or a consulting company or anything like that straight out as IPO. I think you'll want to go through the various different levels of fundraising and then make a decision about the liquidity event, whether it's sell or IPO.
Right. Um, Now, I was also going to ask you about AI. Does your website make any use of that, or if you've got, like you said, something like 100 listings, and I don't have time to look at all of them. Is that coming in anywhere?
Yeah, so we are actually, and it's just a transition point. We are moving to more deal matching. And so what we've heard from the buyers in the 10 months is that they don't specifically have time to scroll through a bunch of deals they're great deals, but they may not match their investment criteria. So they've actually asked us to start matching. And so we're not using LLM AI for this. So we're not using any of the big AI systems. We've built our own algorithms for matching that's coming into the system in the next few weeks. So we will do a little bit more matching, but what people are thinking about of AI today using ChatGPT or LLMs to do that matching, we don't use that today because, well, mostly because the deals are very private, and so we can't be using that externally. But matching is to some degree quite simple. It's industry to industry, what they're selling, what they want, and then numbers, really
You just
matching the numbers.
Okay. So at this point, I think you probably just need some filtering, and but I think once you get to say, thousands of companies listed, you might want to offer people some AI to help.
Yeah, and
do that.
we've looked at a lot of different things, and we just want to make sure we don't have permission to load things into other people's AI systems, and so we can't do that right now. So we'd have to host on our own. We're not there yet, but like you said, it's definitely on the path for growth. The other thing because we're always looking for new buyers, and we're going to start using some AI systems to pull in what the buyer's looking for, so they don't have to fill out long forms, which is great. Which is a great use of AI. So they don't have to fill it all in. If it's out there on the internet, we'll be able to bring it in for them. And this is in the future. And then we'll use it more as a time saver than probably the actual matching, because I just don't see a situation where we're ever able to share the data with any open AI type company.
Okay. So we'll leave that issue for now. I think with
AI companies are selling like crazy, though. They're on our site.
Yeah.
Unbelievable.
Yeah. Like probably with the right security protocols, you could, and contracts, you could do it. All right. Well, can we just spend a few minutes before we wrap this up talking about your journey as a CEO and founder? Because you started the company around a year ago, and you've been operational, you said, for 10 months, and you've closed over $1 billion, have closed on your website, and you've got a huge amount of companies listed. How did you manage to go from zero to that kind of volume in such a short period of time?
Great question, and one that I've been asked quite a bit. Determination, and I think also we really did spend a lot of time thinking about, okay, what is a problem that people want. But really, I'm lucky that I'm involved in two business organizations. One of them is called YPO, and the other one's called EO. And so I was able to reach out to that network because they're all business owners or business runners. I was able to reach out to that network to get things started, saying, here's what we're doing. And there was enough interest. So and really for all of them, I just gave it away free or we just gave it away free to start the spark up. And it really did start rolling from there because companies on the advisor side and the buyer side were starting to see success and great deals. And so I think I can credit it to having a great network already. I'm just really, really blessed to have that. Also because we've sold companies and my companies have bought companies, we had relationships with buyers and sellers. So it's not something that would be easy, I think, for anybody to just start without a great network. And I was very lucky that way.
Yeah. Well, you also have a lot of knowledge from years and years of experience. So I saw on your LinkedIn profile that you worked at a family office for something like 14 years. So you, I guess, had some early experience in private equity, before you even went
Yeah.
through those sales with your own companies. And you have a master's degree from MIT in entrepreneurship. What is that? Is that like an MBA?
Yeah. So it's an entrepreneurial master's. It was provided through you were able to apply to it through organization called EO that I talked about before, and it was a 4-year very intensive course. But it did the one thing that I learned early on. Unfortunately, I was able to take this early in my career in my 30s. Is I was able to find out that there is a proper way to run companies, and so it helped my leadership journey unbelievably from, having 10, 15 people to going up into the hundreds of people. And I don't think I would have been able to do it without that knowledge.
Okay, so do you think that you're going to continue this on this meteoric rise? You've been scaling up so fast. Is it still do you still have that same momentum?
I actually think that our timing is great. Probably everybody's heard of, or maybe you listeners haven't heard of it, but there's something right now going on called the silver tsunami. And essentially it's baby boomers that are looking to exit their companies in some way, shape, or form. There's a lot of companies that are changing hands in some way, shape, or form. And whether it's to family or whether they're being sold privately. And so there's really good timing with that. And there's more buyers than there ever was. And so I think our timing is good. And I think the traditional way of knowing who all the buyers are is just gone because there's so many new ones out there. And so having a platform where you can actually get to these people that you may not have heard of, because it was really, as much as I hate to use the words old boys club, but it really was before everybody knew everything that was going on. But it's just so large now that it's impossible.
Sure. You can't know everybody, even in a city like Calgary or Vancouver, not that big, but you can't know a million people, right? So there's always going to be new people, and worldwide, of course, you want to have some kind of way of reaching out to them. So I think you are definitely fulfilling an unmet need there, because a lot of this just relied on personal networks, without actually going online in any way or whatever.
I've got a great story about that too that I think is kind of interesting. Is when we got started, I posted on Reddit. You probably know Reddit, in the private equity group, and one of the guys wrote back. He said, "Well, I source all my deals on the golf course." And there were just so many people that came back and said, "That's not the way anymore. It's just not. It's not true."
Yeah, that's right. You can't be lazy about these things. You got to keep up with the new technology.
Yeah.
Okay, well, that sounds like a great place for us to wrap up. And if people want to know more, go to CIMamplify.com.
Correct.
That's right. And thank you very much for coming on again. Was there anything you wanted to say in your closing remarks?
Yeah, I think just like I did at the beginning, I'd like to stress that if you're thinking about selling your company, don't do it alone. Go find yourself an advisor. We don't find your advisors. We will in the future with advisorchooser.com. But don't do it alone. It is not a good idea. And there's no way I could have sold my companies without help.
Right. Okay. So you're saying a month from now, we can go to chooseadvisor.com.
Advisorchooser.com. Yeah.
Advisorchooser.com.
Yeah.
In about a month.
Yeah.
Okay. Are you going to have a link to that on the CIM Amplify website as well?
Yeah, it'll be right at the bottom as soon as it launches, and we'll start off with all the advisors on CIM Amplify. So it'll be ready with lots of people already, and hopefully we'll keep adding, and it'll do a little bit of matching between your company and the and advisors, and hopefully it'll give you a nice robust list of people that you can interview.
Yeah, and then I guess you'll also be announcing it on your LinkedIn page, so people will have different ways of finding out when it's available. But 4 weeks, we'll be looking for that, because that sounds like a great idea too. Well, thanks again, and we're going to wrap this up. Thanks everybody for joining us, and until next time, goodbye.